Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. The most recent activity here had been the late August break higher above the July to August upper bear channel. The market continues to break higher over some more serious pieces of resistance, and in the process formed an ascending wedge pattern, currently 969 to 1012. This carried on higher until in late September the market's rise met a resistance that it could not overcome, despite trying for 4 weeks. This was the important slowly rising long moving average, currently at 940, at times coinciding with the November 2012 high at 930. This moving average was breached but did not have 2 consecutive closes at any time in points of its testing. Last week, at the high water peak of the market, prices turned down, making a very interesting weekly key reversal down, and headed even lower, down through the lower trend line of the ascending wedge pattern, making a clean break lower, with all the implications that has. The market dropped below some significant supports, but it's only this week, at the slowly rising short-medium moving average, currently at 855, that we've even found the beginnings of some support. There are now 2 avenues that I can see for this market, though there are no doubt more available that will make themselves known to me in due course. The first is the straightforward move down with potential targets for the ascending wedge pattern. Thus, a primary target X on the downside was already achieved in the 860 area, whilst a secondary harder to achieve target X1 is way down below in the 712 area. This leads to the second avenue, and something that I have previously mentioned on a number of occasions. It is the possibility for the whole of the July to date action being not just a V bottom, but a V bottom with an extension. Now, these extensions to V bottoms have something like a bull flag within them, and that is what may be being built since mid to late August. Personally, it looks a little slack as a pattern, but if the short medium moving average manages to hold the market up, and we then see prices revert back up, well, then this second scenario, the larger V bottom with an extension, that may or may not be a bull flag, suddenly looks a lot more interesting. Chicago corn. I'd like to recap once more some of the key elements of my comments formed over the last few weeks, as they still seem very valid. The first factor is the reverse head and shoulders pattern over July and early August. I was initially unhappy about this pattern, but it has turned out to be a good one, and especially the neckline, currently at 689, has been incredibly supportive since the market broke higher over it back in late August. The primary target for this reverse head and shoulders pattern has already been achieved, and for the moment I've retired the secondary harder to reach target in the 714 area. Secondly is the impact of the slowly rising long moving average, currently 687. This had earlier tried to cap the market, but as it separated from the 50% Fibonacci line of the September 2021 to April 2022 move at 661, its efficacy as resistance faded, with the market moving up through it. It has recently become, in another part, an indicator of the very recent bullish angle of attack, and in a further separate part, support. Finally, and most important of all, there is the July to date ascending wedge pattern, currently 742 to 702. I'd marked this in red, as you can see it. I'd personally found this to have been the most elegant of all the factors I've spoken about. Yet we are now exiting this pattern, or at least seem to be. This exit has only started this week, and I would need more time and data to see if this is really happening. The reason we have seen this exit from the ascending wedge pattern in the first place is because the market has been getting squished in between the overhead congestion area 694 to 700, containing the neckline of the old March to June head and shoulders top, currently at 698, and the supposed support of the long moving average. The neckline of the reverse head and shoulders pattern also below, and importantly, the lower trend line of the ascending wedge pattern. Well, this situation has reached its cusp, and we're now awaiting the result of this market's pressure to make itself evident which way it will go. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.